the first time in a decade, on Wednesday, U.S. Treasury bonds were downgraded from AAA to AA+ by Fitch Ratings. Joining larger rival Standard & Poor's, it didn't downgrade the dollar, but only because it's the world's reserve currency. Many economists and the government downplay the downgrade, claiming it doesn't really do anything. The dollar remains the most desired currency. They're correct in some part. The dollar accounts for almost 60% of official reserves around the world. According to the S&P, that gives the U.S. a license to be irresponsible. After the downgrade, the U.S. ranks lower than Australia, Canada, and some European countries, according to Fitch. The question is, how will this affect us? And there's two broad economic effects. Higher borrowing costs. When the creditworthiness of a country is questioned, investors may demand higher rates on government bonds to compensate for the increased risk. This would make it more expensive for the U.S. to finance its debt. Eroding investor confidence. This loss of confidence can lead to a reduction of foreign investment and decrease in overall economic activity. As investors react to the downgrade by selling off dollar assets, the currency's value would decline. Exports become more expensive as the dollar weakens. These two, however, will not necessarily be felt right away by ordinary investors like us. That's why many investors are insisting the downgrade won't affect us at all. Many point out that when we were downgraded in 2011, nothing really happened. Yeah, nothing happened right away. The effect is long term. This is what it makes it so easy for them to dismiss it. It's against a larger global movement. Credit ratings like this are pinned on government's ability to pay off its growing debt. For years, the U.S. was spending more than what we're earning. That forces us to make monthly payments so that we don't default. One advantage we have is that we have the world's #1 currency. Countries won't let go of their dollars overnight, and they have a lot of them. The chance of them sinking the value of their own investment to zero is low. However, the downgrade is happening against different global economic conditions than it was in 2011. Other countries are strengthening their own economy and are forming alliances so they can trade directly without using the US dollar. This has been unfolding for the last decade. When the US sanctioned Russia, it highlighted a threat that no country wants, reminding the world that it can happen to them. That is the reason enough for them to move away from the dollar. Fitch's rating emphasized that more than anything is how the US continues to use its economic power for political gains, and that pushed them to downgrade us. It also emphasized that the only reason the US dollar has been downgraded as its usefulness around the world, once we lose that dominance, it will further downgrade the US dollar. This downgrade is a heavy weight added to this already heavy load piling up against the US and the dollar. And it wasn't happening as much in 2011, but it's happening today, and it's important. It's outstanding that still government officials are brushing it aside like it's not really a problem. It's not a problem in the short term, but many people believe it will be a problem in the long term. And the long-term effects of our credit rating going down is what eventually could take the dollar down and put us in a very bad financial situation.
Noble Gold Investments has a top reputation in the gold and precious metals IRA industry. From their exclusive secure storage in the state of Texas to their white glove service. Minimum investment for IRA is only $20,000, and low markups on the metals make Noble Gold a very attractive option. Visit the link below the video or noblegoldinfo.com or call 1-626-684-4908 to speak to someone and get your free investing guide and more information right away. Don't wait. Do it now.